The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host who loves to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
So we've got Congress kind of arguing. From what I've read in the headlines, they tried to advance the bill in the Senate, and that was defeated. It only means that they want to consult a few more additions. And, of course, I forget what the weasel's name, the mayor of Chicago, who used to be in the administration around 2010. I'll think of him in a minute. But he said, let no crisis go to waste. And, of course, that's what everybody in politics will do with this, and that is extract your pound of flesh. Why you probably should be doing something else like serving the people. But it doesn't matter which side you're on. They all do it. And so we'll have to probably wait out a little bit more of the day here. We'll keep an eye on everything. Volume's still fairly good. The only thing I have to say is that the patterns look literally as good as I can ever find them. For long-term purchases, short-term not so much, but long-term I really like a lot of these patterns. Short-term, if you're trading for and maybe trading on a daily basis, I don't think the risk reward until we find out what happens today is worth it. I mean, if you've got a 10-minute chart or something like that, yes, you can make money, but something that I can do via a newsletter, nah, not really. And of course, if you're only talking about being long for a week, you can only be wrong for a day. And that's the other side. So we need some kind of to start moving up. We need some kind of real signal through today. But man, I think they're squandering it because the market couldn't probably, at least individual stocks, couldn't look any better to me. I've got a lot of buys out, and if they close over a certain level, I'm going to keep them. For long-term holds in the Tech Insider. And, of course, the daily newsletter, I've got one nice position that I love. We'll see whether or not the market will let me keep it. But, not really that big of an issue right at the moment. It's down less than 1%. But we will see as things move on. Again, as we start the day, down 68 on the S&P 500, Dow down 664, NASDAQ down 75. And, of course, probably the biggest mover of the day behind everything has been this dollar. It's printing off 103.17 right now. Earlier in the day, it was 103.70. A couple of hours ago, it was 102.55. It's certainly starting to act more like a heartbeat monitor than a dollar index. But, as we see. See if there's anything else I really wanted to bring up. Crude, of course, still not moving much, down 31 cents. Gold, the big mover, up $82. So back into the trading range as you see it. Silver up, what is it? Up almost 7%, up 83 cents too. So you got action just about everywhere you look. Question is, how is this going to resolve itself by the end of the day if they don't figure out either to pass it or pass on the big stuff that they've got going on today. But most of the stuff I'm looking at is not finding lower lows, even with that. And, of course, we have a huge amount of money coming into the market from the Fed already. And basically they said whatever it takes. They're ready for it. So we'll see how this works out. I think everybody knows that eventually this bill will pass. Question is only about it when. And, I imagine a lot of people are buying thinking that they're going to sell into the pop, and we'll probably make it fairly volatile. You can give me a call at 877-927-6648. You can email me at path@tfnn.com. Rahm Emanuel, yeah. Never let a crisis go to waste. What a weasel. Okay, what else do we know? That's it. Let's do a little history. Then we'll go into charts, and hopefully we get some good news before the end of the day.
And it's all just a little bit of history repeating.
On this day in 1960, the first patent on a laser is issued to Arthur Charles Howard Towns, who assigns it to Bell Laboratories. Still, no one has figured out how to attach these lasers to the heads of shark. Now, throw me a frickin' bone here. Of course, the root of all this technology lies in the fundamental physics research from a paper in 1917 by Albert Einstein, who literally thought it all up in his brain. They didn't even have examples of this stuff until 1950s. But if you want somebody that has both an incredible understanding of physics and an imagination to see stuff years and years and years before it could even be thought of being tested, it's certainly that. Of course, laser is an acronym from light amplification by stimulated emission of radiation. And the whole idea is that if you can get light waves all to be coherent, i.e. All the peaks and valleys to happen at the same time, 1 watt of laser is probably worth about 750 watts of uncoherent light that's just bouncing around. If you've ever been on the ocean or a lake and seen chop everywhere, that's what most light is like, just chopping back and forth. A laser is all those waves coming in, like the North Shore of Hawaii, that 30-foot wave ready to crash on you. If they're all put together, they make something that has an enormous force, like nuclear weapons, which, of course, he came up with E equals MC squared, and there's some more to the end of that format, too. Okay, we're still kind of bouncing around here. No advancement on the bill. So they'll go back and jaw on it a little bit more, off 75 on the S&P cash, which is a mere 3% chicken feed for what we've had over the last few weeks. We'll be back in a minute. Make sure and give me a call at 877-927-6648 or email me at path@tfnn.com.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And we're looking at when resorts, we'll look at some of the pops and drops today while we're waiting for everything to work its way out. Even now, wind just a little bit higher, but not into the high of Friday, which was $60 even. You got to 58.40 today, but a little of that bailout, looking at going to hotels, or a possible bailout, but kind of light volume out here. Again, these things are probably going to bounce a little bit when shorts hop off of them. My guess is in the next few weeks that half the bounce is going to come off of any kind of stimulus bill, and then you're going to probably go sideways on these that have issues going forward. VLO, which is Valero Energy, no real room at the inn for Christmas for Valero. It did have a small bounce on Friday. It's right back in. The only good thing about these, like I said, a lot of these stocks are showing volume and the individual equity that could be interpreted as fairly bullish. You got down to a low of 33.51. A previous low on Thursday was 31. So you're into that candle with that had 9 million shares with about 3.6 so far. And of course, in the weak sectors like energy, you're just hoping the things quit going down so that the rest of the indexes can go higher. There'll still be a lot of deadwood following them. Again, some look at sectors that are trying to bottom out. Nice kind of reversal from Friday's huge down candle of 4.2 million shares on Take-Two Interactive. Of course, they're a video gaming company. Up today on fairly light volume, but back to this gap that's been, you got hit 4 times here in the last 5 or 6 days. Around 110 looks like where resistance comes in. What else do we have? Okay, question about thing. I've got 2 newsletters. One is a long-term newsletter, more of an investment newsletter. The other one is a trading newsletter, and where it is very actively traded. I may hold positions for 3 or 6 months if I can in the longer term one. The other one is a trading newsletter. So I may be sitting on those for a while, so there aren't so many trades in them. That's in the Tech Insider. Hey, Dave, I enjoy your show. Won about 150 shares of SPY. Cashed out at 315. Have started buying in small, starting at 263. Should I be nibbling or wait? Look for the long-term hold for at least 3 years. Well, I thought that one of the reasons why I was pretty hot on today being a good day for the market to go higher was a massive amount of put buying on Friday. And almost always one of two things happens. Either you get a 1 or 2 day bounce in this kind of bear market that we've had, or you find a low that's very buyable in a bull market. So I suspect that massive amount of put buying on Friday into quad witching was something that could put a fairly decent floor around these levels. And again, I am only in one ETF. Everything else I'm buying is individual stocks. As I said before, energy is going to be an anchor around the neck. Well, this is another tortured metaphor, tortured mixed metaphor. That energy sector is 30% of the S&P. It's going to be an anchor around it. You're not going to get that in the NASDAQ or any of the NASDAQ movers. So if I was going to be long any particular index, it wouldn't be the SPYs. Certainly would be the NASDAQ. I would much rather focus on individual stocks, some in the S&P. But again, that's going to be a tough one, along with the small caps who might have problems finding money. It's time to find the fastest mare in the stable, and it's probably not going to be just the S&Ps themselves. So that's it. Give me a call, 877-927-6648. Okay. What else do we have? We got a bunch of stuff here. Okay. Back to stocks, which I had already thought about. Okay. Do I know anything about this ticker? DUOT. DDOT. Okay. It doesn't even pop up. So I don't know what it is. DOUT? Don't know. Okay. Let's look at some more. STZ. Constellation Brands. Of course, any retail stuff is tough. Today we've got about 4 million shares already going through a 3.6 million share low just a few days ago on Constellation Brands. Not a good sign, as I would say. Of course, some of the bigger ones popping early in the day on the hope of a bailout with some decent percentages has been these cruise ships and hotel operators. You're up a little bit on this, but man, it's still a dangerous play to be in. Phillips 66, again, energy still having some issues, although if this energy sector does bottom out down here, I think you can say that it would be very interesting, not in the fact that I want to play energy off the lows, but that the rest of the market, NASDAQ and non-energy related equities in the S&P 500 and maybe even the Dow. But again, anything in the Dow, anything in the S&P is going to have kind of an anchor around it, and not a big fan of going in just that level. Down today on 3.2 million shares, which is not bad compared to the previous down days of 11.5 million shares, and also 7 million shares back on the 18th. Do I have a somebody on the line? Heard some audio in there. Maybe not. Okay. That's good. Oh. Nope. Okay. Question about IBM and if there's anything out here. Of course, IBM back through the previous lows. As I said before, when a lot of people were talking about IBM, they've bet their entire future on quantum computing. Well, I guess we'll have to handle that when we come back. The problem is, man, you got a company that's going to always be losing business as it goes forward and trying to replace it with something else. Maybe one day it'll be a good buy, but you blew through the last low on December 26th at $100. There isn't much below it.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, the chop still continues in the market. We're down 59 points on the S&P, Dow down 530. Can you imagine bringing up Dow down 530 just a month ago? People would be pulling their hair out and saying, and now it's like water running off a duck's back. No big deal. But at least we can see. I mean, probably not a big deal in the idea that some stocks are even up. on a day like this, but we'll continue to fight the good fight. Anyway, we were talking about IBM when we left, and there just isn't much in there. They're going to be spending lots of money. Maybe the quantum computing thing works out for them. Certainly machine learning hasn't. And it could be a huge business for them. The problem is it's going to be a couple of years before they really start shipping any kind of machines that are going to bring in a lot of money. MCHP, microchip technology, nice bounce off the lows out here. Good percentage mover on the day, got to 68.64. And again, you're not going to bounce very far before you start hitting a lot of gaps down that have been here. So we're going to have a lot of and continued bounces off this market. We talked about confluence levels and Fibonacci levels on Friday. Generally, a lot of times people, at least, I wouldn't say people, when I use them, I like longer time frames and bigger moves. So when we look at these, like in timing the trade charts here, you want to look at the retracement levels in them, and just a bounce and a downtrend in microchip technology takes you to 75.67. A 50% bounce, $82. So there's some fairly significant meat on the bone if you can get these movements now that we've had something. Now, again, a lot of these things are going to be what James Wyckoff called automatic rallies. That is a rally without any preparation. We're going to probably have fairly quick moves off the lows. Some stocks are already doing that. The market, not so much. But again, like I said, there are a lot of dog stocks that are going to be out there in the energy sector. Now, S&P, when we get the green light, would probably be if the Saudis decide to change the price on oil. We saw last week, I don't think I talked about it on Friday, that the Baker Hughes numbers in Canadian oil wells dropped and rigs dropped in half in 1 week. And that tells you the marginal cost that it takes to build and actually have any kind of production out of any of the wells that they have up there in the Great White North. I don't know how many people remember Doug McKenzie, the McKenzie brothers. Anyway, up in the Great White North. So could you even have a 382 up to a takeoff, man? Hey, Hoser. Okay. So you got some bounces out here, and even if you're the most bearish person in the world, you got them. You got them in 2000 in the .com crash. You got huge bounces even after the housing debacle. You got huge bounces after the crash at 87. They happen. Again, so you don't want to marry these things, but you do kind of want, if you see a good setup, maybe you want to get engaged, see how much farther you can go. But if you're trading on a daily basis, at this point, you've got to look and see how much meat is left on the bone. You needed to buy it that low if you were going to buy it for a trade. If you're holding longer term outlook on it, then of course you have the ability to have a longer term and bigger profit on the other side, and that changes the risk reward setup for those stocks. For the losers out here, retail isn't getting any better. You are down with significantly more volume today than a couple of days ago on Macy's. You had 21 million shares 3-4 days ago. You got 31 million shares today. Can I say just unclean lepers? That's anybody that's got a retail store right now. Live Nation Entertainment, kind of a bounce off this 2170, the March 18th low. You're up today. And again, you got to watch where resistance is coming. You got the gap down on the 16th that came with 9.5 million shares. You're up on 4.4 million shares. Man, if you took 21.50 to 39.50 or 39.31 today, if you didn't take some money or you didn't have an extremely long-term view on this, then you're nuts. You've got to have one or the other. Either this was a huge move off the low that you bought down here on this massive push lower, but you went right in there. That would have been where you actually were looking to take your cash. To what else do we have? LKQ. Not much on this one. Light volume retest. Lennar. More of the lepers of the stock market. It's going to take a while to get home loaning unstuck. If you remember 2008, not that long ago, you're back down light volume. I mean, if you had an incredibly long-term view of the world, you could probably buy some of these housing stocks. I personally just think that there are much faster horses out there. More losers. What do we have? Coals. None of these things are going to look any better, probably even after we get a cure and everybody goes back to normal. I don't know how many people are going to go into these places and not think that they're just one giant coronavirus waiting to get them. But you got to go to the Walmart or Target and get your stuff, but maybe the Piggly Wiggly. But I don't know if there's going to be, I'm thinking that this is a second story. The first story is everybody going back to shop at the big places because they got to already and maybe buying stuff there. It'll be the second story will be when people start going back to strip mall stores like Kohl's, but I think it will be a while. Yes, a percentage of your life expectancy. Okay, where's the downside? To KBWD. KBWD. Okay. High yield. Man, this is a tough question to answer. We'll be back in a minute. But I'm going to say I don't know. And I'll tell you why when we get back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And had a question about KBWD, which is the high yield side. I can't answer this question because guess what? The Fed's going to be buying bonds out there in the open market or around the open market. Even if they didn't, if all they bought were U.S. Treasuries, that also changes this. I have no idea how much they're going to buy and what they're going to buy. And so I don't know how you can put or handicap that out. I'm not a big bond guy to begin with, but the question is, do you know what a handful of people at the Fed are going to do? And I think that affects bonds more than anything else. And since I don't know, I'm going to try to go to stocks where I try to understand what a lot of people are going to do instead a handful of people. Okay, we got that. Okay, Intel showing relative strength. Again, anybody that has some cash and a good business and can get loans is a better risk going forward in these markets than someone that needs cash. The downside, as we talked about on Friday, is that your bounces, at least in confluence levels, are going to show you where significant resistance is. I think there are faster horses than Intel. I still don't like its CEO no matter what, even though he has a good business. When they fire that CEO and get a new one, I think you're going to see the exact same kind of results you had with Microsoft when they got rid of that miserable Mr. Ballmer. And you can see exactly in the chart when he left. We've got the same kind of guy that's kind of weaselly running Intel at the moment. Generally, I don't put a lot of stock in the particular CEO, but except when they're bad. And generally, you need kind of a Captain Kirk and a Mr. Spock. Mr. Spock needs to run the finances and the book. You need kind of in technology, you need kind of a Captain Kirk, a kind of guy that knows how to do some risk taking and some adventuring. You've got basically two Spocks running Intel. The CFO and the CEO both are more bean counter oriented. And in the short term, as I said before, they can make the books look really good. But though when reality sets back in, they seem to never get any better. These stocks seem to go sideways for forever until they get out of it. But unfortunately, the people in the CFO business also tend to be incredibly good political infighters in corporations, and they dig in like an Alabama tick. And sometimes it takes dynamite to get these bastards out. Did I say that? Anyway, we'll go forward from here. Okay. Sometimes it's just good to let it out. Question about Trimble. Of course, any of these GPS stocks are going to have some big problems with aviation out. Of course, them and Garmin. I thought both of these companies were baked years ago until they really figured out how to sell the subscription and their glass cockpits in aviation. And of course, once they had the glass cockpit, you couldn't use your chart from last year. You have to download everything. It won't let you use last year's chart in your glass cockpit. So they had these big subscriptions for all kinds of stuff. They were the biggest part of this, and they turned it into a subscription business. Guess what? When you only have 30% of the people in a reduced schedule flying, there aren't going to be that many people subscribing to all your aviation NOTAMs. That's notice for airmen if you live in Lutz. But certainly you've got a little bounce out here. I do think this is a long-term play as that aviation business comes back. But again, there's going to be two stories. The ones of stocks that take off like Insane Bolt, or Usain Bolt, his brother Insane. And of course, they're going to be the ones that take longer to bottom, that are probably going to be more stable on the way up and easier to buy and easier to sell. That's probably the latter in this one, but I think it's going to be a tale of two cities. And of course, there's a third city, and that third city is Sodom and Gomorrah, and didn't end up well for them. That is probably the energy sector as the best example, and that is that unless something majorly changes from the Saudis, what was that song from Keehaw? Gloom, despair, and agony on me. That's the only one I remember. Yep, that streaming business is what everybody likes. Kimco Realty out here. And again, like I said, a lot of these things look like they may be bottoming, but I don't expect that these things are going to roll higher. You got light volume at least back into a couple of days ago that had 10 million shares back on March 10th. But again, these aren't pretty. And we're in the business of a beauty contest, but we're not picking the most beautiful girl that we like. We're trying to pick the most beautiful girl that everybody else likes. So we have to pick not who we think is best, but who everybody else thinks is best. And of course, they're thinking, no, I'm going to pick who he thinks is best. So it ends up being kind of like that Inception movie. Either you really like it or you get a big headache. Helmerich and Payne HP, a little bit of a bounce. Not much in the way of juice on that one. HFC. Here's a good example. I said I unfortunately had other things going on this weekend. I wanted to enjoy my life and not spend the last minutes of it if I listened to Governor Cuomo dying at home. But Holly Frontier HFC, this is an excellent example of where you could see, probably not going to get it in this one, but where you would see resistance with confluence. Again, you're not bouncing off these levels, but if you do get any kind of move, maybe this thing goes sideways for a while. This is the postcard for seeing where confluence works. You've got two different levels of Fibonacci retracements. You basically draw a little area in here where it is the 382 of one to the 618 of the other. And if it's very fine, like about 1% or so in the price, that tends to be excellent resistance and support over time. These both work on the way up and down. As I said on Friday, if you need a real in-depth view of confluences, in fact, I'll work out some more of these during the week. I actually started this and then figured out I needed to do a lot of work on data. So I was busy, ran a bunch of stuff over the weekend to comb through and clean the data so I could start running stuff today on it. We'll be back in a minute, but Holy Frontier, look at this picture, find it back on YouTube tonight or something if you're not familiar with it. But these are the postcards that can see, and at $18, if this thing goes higher one day, 18 to $42 is a nice range.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Continue on. Did I get any more emails here? Let's see. Oh, got one more. Okay. Anyway, Holly Frontier, good example of what can happen if the news changes, but I don't see the news changes right now. Christmas is coming, and Hasbro bounced off the lows a little bit. We've got a little doji out here. But again, a lot of these stocks may take 3-6 months to base out and change. Again, the biggest losers out here are going to be the retail stocks as everything is closed. People won't be going back to malls anytime soon, and they'll be going where they have to go. But Gap, you had 17 million shares on the 17th. You got about 10 now. So you'd really like to see these things come down to something, maybe September-ish. Maybe these things, if everything turns around, could be kind of interesting. But, anything in travel, until we get some kind of significant change, even a bounce, if we're talking about aviation or these are going to be the drags of even on the NASDAQ, like Expedia. So I don't know. I'm much more of a stock picker at these lows, better than a cotton picker out here. But again, I'm going to say that there are going to be a lot of stocks that make a lot of money right off the bottom. And then there's going to be a lot of stocks that make money 2-3 months down the road. But those are going to take some consolidation, maybe even 2 weeks, but going to take a little while. In the meantime, you always have to remember to sell when you can and not when you have to. And then come back here tomorrow. Same bat channel, same bat time.